The biggest super app in Southeast Asia is going public in the US stock market via a SPAC merger with Altimeter Growth Corp. This means you'll be able to buy Grab stock as early as today. If you're wondering whether to buy Grab stock at this very early stage, or you just want to learn how to analyze a buying opportunity in the stock market like this one, then this video is for you. I will share the most important parts of the recent investor presentation made by Grab and Altimeter on this SPAC merger. We'll also talk about the valuation of Grab stock, the stock price projection, and if it is worth buying. Now, if you do plan to buy Grab stock, I suggest you go through the entire video to start off your due diligence. Hello, deal makers. If you are new to the channel, I'm Ronald, and I talk about investing in multiple asset classes like real estate and stocks. So, investing in any market can be very difficult, confusing, and scary. And there can be a lot of hype out there or worse, scams. So, my hope is that by sharing my personal analysis, I can help you become a smarter investor by the videos in the Dealmaker channel. Now, disclaimer, I am not a financial advisor. So these videos are just my personal opinions, and you should do your own due diligence. So let's get right into it. So one thing you should know early on is that this is different from other SPACs that have made news in the market. It's not a company like QuantumScape that went public, based on promising technology, and yet that technology will become available in 2025, 4 or 5 years from now. It's not a company like, say, Lucid Motors, who went public, but they haven't manufactured their product yet. They're just getting started. Grab is a 9-year-old company with a dominant regional super app that has enabled 1.9 billion transactions worth 12.5 billion in gross merchandise value. So it made 1.6 billion in revenue in 2020, operates in more than 400 cities in 8 countries, has more than 5 million driver partners and more than 2 million merchant partners on its platform. So this company already has a proven business model and it's ready to grow by at least 300% in the next 5 years. Grab started as a taxi booking mobile app in Malaysia in 2012. It was called My Taxi. It then expanded into Singapore, Philippines, and Thailand in 2013. And it started to offer private car ride hailing service in 2014 and expanded into Indonesia in Vietnam in the same year as well. Then it introduced deliveries through Grab Express and ride sharing in 2016 through Grab Share. So you can see it has continuous expansion of its product offerings almost every year. Now, it passed the 1 billion mark in gross merchandise value in 2017, and in 2018, it exceeded $5 billion in GMV and acquired Uber's business in Southeast Asia. So it was able to acquire its biggest competitor in Southeast Asia, and now it has a virtual monopoly in ride hailing in the region. In 2019, it hit $10 billion in gross merchandise value. So growing 10x in just 2 years. And in 2020, it was awarded a digital banking license in Singapore, solidifying its fintech ambitions. All those products and services truly make Grab the number one super app in Southeast Asia. So, in one app, you can have food and groceries delivered to your home or office. You can have parcels or any package delivered to another person or destination. You can call for any vehicle that is available in your country. You can book a hotel, book a doctor's consultation, pay your bills, and more. Previously, you could only pay with cash or credit card, but Grab saw the opportunity to add a digital wallet, and that gave birth to an entirely new business segment. So their fintech business. Now you can buy insurance, you can invest, you can get a loan, you can send money to people, all from Grab. And Grab is finding more ways to monetize their platform, such as through digital advertising. And this works because they have a huge installed base and they have millions of users on a monthly basis that use the app more than once a day. So the app is deeply integrated into consumers' lives. You can have food delivered more than once a day. You can book a ride in the morning, book a ride in the evening going home. Once the pandemic is over and everything is back to normal, you could pay your bills, you could have groceries delivered, you can do online shopping, and who knows what other services will be made available in the future. And all of these customer interactions create data points for Grab to collect and analyze, getting them a unique view on consumer behavior patterns. And that allows them to sell their data for, say, for digital advertising or other purposes. And while it has millions of active users, it's still small. Southeast Asia is still in the early stages of online disruption compared to the US and China. Online food delivery penetration is at 11% compared to 21% in the US and China. This adoption was accelerated by the pandemic, but even as pandemic restrictions have been lifted, in some areas, the habit of food delivery has stuck. So this percentage is expected to grow in the coming years. Southeast Asia has huge gaps in transportation infrastructure, and some areas have traffic jams or congested public transport. So, on demand mobility is still in the early stages compared to China. And there is a huge opportunity for promoting financial inclusion because 40% of Southeast Asia is still unbanked or underbanked, and electronic transactions are lagging behind the US and China at only 17%. So compared to China's 42% and the USA's 82%. So Grab has huge tailwinds that are going to push its growth forward. Growth will not just come from continuously expanding the user base, but it will also come from increasing the GMV per user. And Grab is very effective in doing that. Like looking at this chart, those who joined in 2016 are now spending 3.63 times more now than in 2016. And Grab is getting better in getting users to spend more on the app. So the newer users are actually spending more on their second or on their third year compared to the previous years. So it's not surprising to see Grab's impressive growth numbers. Grab is forecasting a 40% compounded annual growth rate on GMV, and this parallels a 42% growth in net revenue. That's assuming they're getting a constant percentage of GMV. If there's a negative, Grab is not yet profitable, but it's getting there. Positive EBITDA is projected in 2023. Diving deep per segment, deliveries has grown massively, especially during the pandemic. The 203% growth is not sustainable, so they're expecting a 40% CAGR moving forward. They expect a take rate to stabilize at 15%, and the segment is expected to be profitable by next year. Mobility took a hit during the pandemic with everyone staying at home, but it's expected to recover by next year as well. Yet, despite that, the segment is already profitable. The fintech segment has a dizzying array of financial products and services, but they can be grouped in four major segments: payments and rewards, lending, insurance, and wealth management. Currently, majority of the revenue comes from payments, but with a huge driver and merchant user base, the lending and insurance segments is expected to drive the non-payments TPV and revenue. Another good development is that the TPV, or total payment volume, is expanding outside the Grab app, which is a good thing because this simply means expansion to markets that the super app is not reaching yet, such as e commerce, gaming, or online trading. Grab's business is not without risk. Operating in 8 countries, they have to navigate a diverse set of political, regulatory, and geographical risks, such as the political unrest in Myanmar or the floods and natural disasters in the Philippines. But because it operates in 8 different countries, the risk is spread out, with no single country contributing more than 35% to net revenue. Now, Grab also makes a point of working closely with the governments and being an active participant in nation building. This mitigates the political and regulatory risk. But a huge risk for Grab is if it's forced to treat drivers as employees. That's going to massively change the business model, and the impact is hard to measure, but it will definitely be a huge blow. And finally, competition. While Grab is number one on a regional scale, it's not number one in each country. For example, in the Philippines, GCash is the leading payments app. Fortunately, GCash operates only in payments and only in the Philippines. Currently, there are 4 regional players to watch. According to this Southeast Asia e-money report, the top 5 regional fintech players are Grab, Sea Limited, Gojek, Ant Group, and Ascend Group. And only Gojek competes directly with Grab in ride hailing and deliveries, but most of its business is in Indonesia. So Grab is in the driver's seat, and we know it's a great company, but is it a great value? Let's look at the valuation. The PIPE offer to institutional investors joining the SPAC is $10 per share. Now, the market cap of the company after the merger is 39 billion. Now, with a sales of 1.6 billion, that gives a price to sales ratio of 24.375. That is expensive, even comparing it to expensive stocks like Square and Uber. So it's about the same as C Limited and lower than Shopify. But all of these are growth stocks, and it's actually hard to pin a company to compare it to because Grab operates in multiple segments. So it's like Uber plus DoorDash plus Square. Now, the premium to buy Grab, I believe, is worth it. Can it go below $10? Yes, but the likelihood is probably low because you've seen the business, their history, and their capability to deliver. Now, their SPAC sponsor, Altimeter, is a long term partner and they've committed to lock in their shares for 3 years. So, no big sell offs happening in a few months. Now, if the broader market goes down, then price can go below $10 and it's a definite buy. But even at current prices, so at the time of recording, the price per share is $12.72. Now it's still worth paying the premium to buy a proven company with a solid business model. It will dominate the region and it's worth putting some speculative dollars. Now, unfortunately for me, I can't buy the stock because it's not available in eToro. How can you buy it? You can buy it in TD Ameritrade or Interactive Brokers if you are from outside the US. Obviously, if you are inside the US, I'm sure you can buy it in any of the platforms that you use in the US. It's under the ticker symbol AGC, under Altimeter Growth. By July, the ticker symbol will automatically change to GRAB or GRAB. Now it's your turn. Do you think Grab is expensive or not? Will you buy it? Well, let me know in the comment section below. If you like this analysis of the Grab Altimeter SPAC merger, please hit the like button for the YouTube algorithm. It helps the channel grow and allows me to make more stock market content like this. Hit subscribe and the notification bell to get more content like this. And watch my best stocks to buy playlist for more stock investing ideas. Remember, it's always a good day to make deals, and may all of your deals push through. See you in the next video.